The Baroda BNP Paribas Multicap Fund has come of age. We are delighted to celebrate 21 years of existence of the Baroda BNP Paribas Multicap Fund. In this fund, a lakh invested in September 2003 would be worth more than 23 lakhs in September 2024. My name is Siddharth Singh. I'm head of Baroda BNP Paribas Mutual Fund, and today we are delighted to have Sandeep Jain, the fund manager of the Baroda BNP Paribas Multicap Fund, joining us to discuss this fund in greater detail. Thank you, Sandeep, for joining us.
Thanks, Siddharth. Thanks for having me here.
Let's start with the basics. Could you please describe how does one categorize companies into the various market cap buckets? What are the SEBI definitions for a multi-cap fund?
Thanks, Siddharth. You have asked a very pertinent question. You have to classify the mutual fund evolution in two eras, pre-2017 and post-2017. Pre-2017, there were no clear guidelines about the categorization of large cap, mid cap, and small cap. In 2017, Security and Exchange Board of India has come up with the clear guidelines regarding categorization of large cap, mid cap, and small cap. The AMFI publishes 6-monthly notification by which they classify which are the companies are large cap and small cap and mid cap. Top 100 companies by way of market capitalization are classified as large cap. 101 to 250 companies are classified as mid cap. And below that, 251st onwards company are classified as a small cap. The latest notification issued by the AMFI on 30th June 2024, 84,000 crore and above company in market capitalization are called as large cap companies, whereas 27,500 to 84,000 crore of market capitalization companies are called mid cap. Companies below 27,500 crore of market capitalization are called small cap companies.
Thank you for describing the various market cap segments to us. Now coming to the markets have run up quite sharply in the last 12 months, and especially the mid cap and the small cap segments, which have run up even faster. So there is a belief that probably they have run up too sharply. So in this market environment, is it a good time to invest?
So Siddharth, if I look at the way the market have behaved in last 1 year, obviously small cap and mid cap has outperformed the large cap category. But multi-cap as a structure invest in large cap, mid cap and small cap. And mandatorily they have to invest in 25% each in all market segments. So they are not missing out any one segment by virtue of the fund characteristics. So as an investor, if I look at the last 1 year, mid cap and small cap has done really well compared to large cap, and investor may be, kind of finding it very difficult in terms of where we need to go and which segment will outperform from here onwards. Multi-cap provides a better opportunity for them. And in this market cycle, we have seen sometimes large cap may outperform, sometimes mid cap may outperform, sometimes even small cap may outperform. So in that sense, a fund which has a disciplined way of investing equally in mid cap, small cap and large cap can be a bellwether fund.
Okay, great. Now let's come to our fund in more specific details. So as we mentioned earlier, the fund has delivered more than 23x returns in the last 21 years at about 16% CAGR. So how do you go about managing the fund? What is your approach to managing the multi-cap fund for us?
So first of all, I would like to thank all the investors, right? They have invested in this fund from the last 21 years. And now just I will describe our investment philosophy and the investment strategy of the fund. So as a house, we follow the BMV approach, which is business management and valuation. Along with it, we follow the GARP strategy, which is growth at reasonable price. This approach enables us to find a good quality growth oriented companies at a reasonable valuation. So this is the basic strategy of our fund house. But just to elaborate how I incorporate in our multi-cap funds. So in multi-cap funds, apart from that GARP strategy and BMV approach, we follow a different allocation approach. If I can take analogy from a soccer game. A soccer game is a more balanced if you have a 4-3-3 formation. What stands for 4-3-3? 4 is your 4 defenders, 3 is your 3 midfielders, and the next 3 is your 3 attackers. The role of a defender is to provide stability and mitigate the risk. The role of a midfielder is to support both attacker and defender. and the role of forward is a more of a providing an attack. So, similarly, if I elaborate this strategy to my multi-cap, it is 4-3-3, 40%, 30%, 30%. So, 35 to 40% would be in the large cap, which provide more stability in the fund. 30% would be in the mid cap, which acts as a both, defensive as well as attacking. And many of the forwards have moved to midfielders. And the last segment is the forward, which is a small cap segment, which is a more attacking and aggressive style. So, this is a balanced approach that is 40%, 30%, 30%. And with this approach, we try to get the companies which are growth oriented and at a reasonable price and allocate the funds based on this approach.
Okay, great. I think that's a good analogy, football or soccer. You talk about the 4-3-3 approach. I would also add the fact that each part of the team is equally important to ensuring that the team as a whole plays and delivers. So I think coming from that, there's a multi-cap fund, and it can invest in all parts of the market, small, big, medium. So can you describe to us how do you go, some of the differentiators of the strategy that have helped you deliver alpha for this fund in the recent years?
Good question, Siddharth. So, if I look at the differentiator on my fund, there are three kinds of differentiator. First is the investment approach that I explained is a top-down approach. And then is the allocation approach, which is a 40-30-30 approach, which I already explained that how I look at the balanced approach. The most important part of my differentiating strategy is stock selection. In the stock selection, I focus on those companies which are growth oriented and which is available at a reasonable price. When I say a growth oriented itself means the ability of the company to scale up. During the life cycle of the company, a company can move from small cap to mid cap and mid cap to large cap. Generally, I focus on those companies which has the ability to scale and grow at a higher than the industry average, which can generate alpha in my fund and which is a differentiating factor if I look at the entire space.
Great. So now that we've put a structure we've talked about the structure to asset allocation, market cap allocation, as well as stock selection. Coming specifically to the fund, so in coming to your portfolio holding, so what is the current positioning of the fund? How is the fund positioned vis-a-vis market cap, vis-a-vis sector allocation? And how do you see it in the next, say, 6 to 12 to 24 months?
Great. So currently, I am somewhere around 38 to 40% in large cap, around 29-30% would be in mid cap, and similarly 28-29% would be in small cap. If I look at the sectoral, if I look at the positioning of my fund, I am overweight on industrial manufacturing. The reason largely is increasing government spending, focus on government under the PLI scheme, that is a production linked scheme, and obviously it has been estimated that our manufacturing pie of GDP would increase going ahead. So that will help overall manufacturing or industrial space. Apart from the PLI, the most important is also the government focus on increasing the blue collar job. If you want to increase the blue collar job, you need to increase the manufacturing base of India. Apart from the industrial and manufacturing, we are also bullish on new energy theme, which is EV also, that is electronic vehicle, and transition of energy from fossil fuel to non-fossil fuel. We have a target to create a huge capacity for renewable power. And this all will lead to the further investment. So we are positive on that thing. On the EV side, we are seeing the pickup of the EV cycle, especially in two-wheeler. So we are positive and we are overweight on that cycle also. On the rural economy, if I look at the last couple of data points regarding the monsoon data or inflation data and government spending in the rural areas, it seems that the rural growth is started to pick up. And FMCG companies are also talking about that the gradual recovery in the rural theme. So we are positive on the rural consumption. In the urban side, the consumption is on the high-end consumption pattern kind of. So this is the basic, kind of sectoral exposure we have. So this is the balanced approach which I am following on terms of my sectoral exposure. In the next 12 to 18 months, I think these themes can outperform into the overall market.
Great. So on equity is a risky category, risky asset class of investment. Within that, we have exposures to small and mid cap in the multi-cap fund, which is relatively even the more riskier aspect. So I think an important point would be on how do you manage risk in the portfolio? How do you go about, what are the guardrails for investment that you have in this fund?
So let me define the risk into the two parameters. One is a market risk and one is a concentration risk. As you said, the small cap and mid cap are more riskier compared to large cap. So by virtue of this fund, the multi-cap fund itself is a diversification of the risk. It invests in large cap, it invests in mid cap, and it invests in small cap. Based on the market environment and macro themes, we generally allocate our asset allocation, though the fundamental of asset allocation remains as a 40-30-30. And we generally, looking at the market environment, global environment, take a informed call in terms of the sector allocation. So that is the kind of market risk we are addressing. In terms of concentration risk, as I said, we follow the top-down approach. And on the top-down approach, we work on sectoral theme and we work on a specific stock theme. And our internal guardrails are also there in terms of maximum allocation on sectoral or maximum allocation on any stock specific exposure. That is why we manage our concentration risk. So these are the risk parameters which we generally follow in our multi-cap strategy. One is the allocation and strategy, which is based on largely looking at the market environment with the fundamental remain there at a 40-30-30 fundamental, and stock specific, sectoral specific internal guardrails are there, and we take an informed decision in terms of manage that concentration risk.
Okay, so one final question, Sandeep. How should investors allocate their fresh investments into the fund? Should they look to stagger their investments?
So good question, Siddharth. Multi-cap funds can be looked by any kind of investor because it has all the segments of market, large cap, mid cap, and small cap. This fund never single outs any kind of market segment as it has a very disciplined approach of investing. A staggered investment is a more a disciplined investment, or a lump sum investment is a kind of investor appetite, whether they want to invest in a lump sum or by the staggered way. But focusing on high growth companies with a better risk reward, this fund can usually generate a better alpha compared to the benchmark and compared to the other segments of the market.
Thank you, Sandeep. Thank you for taking us through the multi-cap fund. Thank you.
Thank you. Thank you all.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.